ask you a question on the client engagement side. I wonder how you are seeing, what kind of impact you are potentially seeing from the geopolitical tensions and trade policies, especially when you're operating in countries like in India or Pakistan. Does it impact your distribution capabilities in any way in those regions?
Well, actually, clients have been really leaning on our globality here, both our global network, but also our thought leadership with, our access to experts in Washington policy-making process. I think in Asia, given the length of our franchise and history of our franchise here, clients really see us as the most global Asian bank for our institutional clients. So we've seen really increased activity, and especially in Asia South, where our corporate franchise makes up a big part of our markets business, clients have leaned in more on our onshore and offshore capabilities as they look to hedge their exposures.
Did you feel like the recent market volatility could be a good thing for your business pretty much across the board? But do you feel like some of the less liquid markets in your coverage were negatively impacted in any way?
We haven't seen that, Sherry. If anything, there's been a lot of diverse interest into these the smaller economies. That's a big part of Citi's ongoing strategy for me. We've hired a lot of key talent in the region, markets heads in our ASEAN countries, so that the core of our business is really providing liquidity to our investors. So making sure that we can be more helpful to them in increasing liquidity in the local markets, as well as in our Singapore hub, has been a key focus.
So you are serving corporates, institutions, governments in Asia South. Has there been a pickup in conversations around how you can better serve them, especially when it comes to digital finance solutions? So just because a lot of conversations around stable coins, cryptos out there is really ramping up here.
Yes, absolutely. We are having more conversations around that, especially here in Singapore. I think the recent developments with Washington looking at a framework for digital assets is very exciting. Hopefully we see some clarity around governance and control so that Citi can engage in a more active way.
When your clients talk to you, Sue, what is it in particular that they're concerned about at the moment?
They're concerned about a lot of topics. Tariffs, of course. Now, U.S. Fiscal deficit is a big story. I expect to be talking that a lot with our keynote speakers and our clients. We have 1,500 institutional and corporate clients participating to discuss these issues. For markets, the market volatility has meant significant increase in client flows, but of course, in outsized market volatility, that poses risk to our business as well. And we need to be there for our clients providing liquidity, so that's top of our mind also.
I mean, the tariff issue naturally is front of mind for a lot of people, from the mums and dads on the streets to businesses to investors. But it will naturally impact the markets and therefore your investors, your clients' portfolios. But how do the tariffs impact your business as Citi?
The real impact has been, increased market volatility, increased client advisory around the topic. The volatility so far has seen significant client flows increasing, and that's been positive so far. We've managed to navigate the risks around that, and with our corporate clients, really been able to provide, more hedging activity as they took the opportunity with Asian currencies appreciating here in the region.